Welcome to today's market report.
Global stock indexes fell and the US dollar rose on Friday as investors digested comments from Federal Reserve officials that signaled further interest rate hikes ahead. Major US stock indices posted losses for the week, with the Nasdaq snapping an 8-week winning streak. The S&P 500 ended a 5-week streak of gains. San Francisco Fed Bank President Mary Daly said in an interview with Reuters that 2 more rate hikes this year is a very reasonable projection. Fed Chair Jerome Powell, in testimony to U.S. lawmakers this week, suggested the central bank has not reached the end of its tightening cycle, while he provided reassurance that the Fed would proceed with caution. Nasdaq led losses on Wall Street, and all of the major S&P 500 sectors ended lower on the day. The Dow Jones fell 0.65%, the S&P fell 0.77%, and the Nasdaq dropped 1.01%. The Pan-European Stock 600 index lost 0.34%, and MSCI's gauge of stocks across the globe shed 0.95%. Treasury yields fell as the market allowed for at least one more Fed rate hike in the near term and weighed the potential for slower growth following weaker than expected growth in the Eurozone. The Treasury market is pricing in the reality of monetary policymakers' willingness to risk an economic slowdown of some significance in their endeavor to re-establish price stability. Benchmark 10-year notes were down 3.737% from 3.799% late on Thursday. Eurozone government bond yields fell on news that German business activity, as measured by PMI, slowed notably in June, while French business activity contracted this month for the first time in 5 months. Dismissal business activity data from around the globe also soared risk sentiment. Data Friday showed US business activity fell to a 3-month low in June as services growth eased for the first time this year and the contraction in the manufacturing sector deepened. This is today's market report. Thanks for listening. We'll see you next time.